Good morning, guys. It's bright and early Saturday morning here, but I just wanted to get off this week 9 recap for you, detailing my trades. I did 5 of them this week, and they were all really good in terms of following my plan, and that's something I've been working on, like you know. My entries have been great, my exits have been getting better, so again, trying to achieve my weekly goals, and we can just jump right in. On Monday, the 11th, I was trading YTEN, and here's what I was seeing. It had this big morning spike, it got halted, and then kept going, and then it pulled back only a little bit, so its highs were roughly 875, and it pulled back to 640. So in the grand scheme of the spike, it wasn't too much. And that's something that I should have been more aware of. So the spike was a huge pattern breaker, and I mean it topped up here in the down here in the 8, so it had some resistance from last year. I wasn't too concerned about that, but then yeah, so it's making this intraday range here. And I was actually playing it. I was thinking, which thank goodness I didn't, but I was thinking of buying this breakout here. And I was thinking of it's going to spike up and then it's going to come back down to confirm it. It never came back down. That looked good enough for my entry, so I didn't buy it in here. But as soon as it tanked here, that started getting me interested. And if it could hold this 642 or 640-ish to 630, 20 range, like of these lows, then I was going to buy it, and that's exactly what happened. You can see in 3 minutes it tanked down, on decent volume, but it probably was just a lot of panic selling. So then, and even a lot of this support here was saving me in case anything did go wrong. But yeah, it did bounce off the 640, and I mean the stock moves pretty fast, so I was immediately interested here. So I finally got my position. It might have been the second candle, but I got it at 661. So roughly somewhere in here. And I was risking off this low of day. I think I was actually risking off. Yeah, I was risking off this 31, which for me was like a lot of risk. It was a big risk level, so that's why I minimized my position. I mean, I could have been risking off here, but then again, that's like an almost 40-cent risk on a $6 stock. So not really what I wanted. It was a bit speculative in terms of that risk, that I didn't really have a tight one. But just this pattern and volatility that it did have, that's why I took position. Long story short, I held through here. I should have been selling half into somewhere in this run up, but again, I didn't. And when it tanked down here, in my defense, I haven't been getting as scared on these first big red candle pullbacks, but this one, I was thinking lower high, and this is a decent gain for me. This was roughly 50 cents. So I just cut it all when I was coming back down here. I got off at 708. That was a really good trade for me. In hindsight, what I could have done is just sold half up here, then been patient with the other half, and then probably would be selling into this next spike / little pullback here. Again, that would have been kind of best case scenario for this, because it never could reach its that midday high again. So pretty thankful I didn't buy that breakout. Saw this as a better opportunity to get in. Got in here. Should have split that position, but the exit overall wasn't too bad. I didn't want to give it as much time because I already had decent profits, so I just got all out here. And that was Y10 for me on the Monday. Moving along to MARA. Skipped Tuesday trading, went straight to Wednesday on the 13th. So this one also was a good trade in terms of planning. but I ended up losing on this one. And to show you more of why I got in, I want to show you the last 2 days here. So, and by the way, I should mention that this is, so it has a big run up, then this is actually the number 5 coming up. And that's what this 11th was Monday. That's what this day was. I guess it was trading it. Yeah, this third one. Yeah, so it came up, and the day after the number 5 pattern, it had this upside down V pattern. But what I want to look at here is at the beginning, the market open, it's having this range. You see this range. Then it breaks out of, you can say, out of these highs and of the morning high. And then it goes up, spikes up, uses that range again as support, and then it goes up higher. So that happened on the 12th, and yes, I was trading at the 13th, like I said. So my thinking was roughly the same. Yeah, I should mention also the day before, it did that same thing. It had its intraday highs and then morning highs, and it broke out of here, intraday highs, and actually tested the morning highs and broke out. So that's been happening for 2 days in a row. So come this day, the third day, when most patterns repeat on the third day, it had that same morning spike, made the morning high, then it had this range in here, and I bought on this breakout on the intraday breakout here, and my entry was at 639, so actually right about here. I was risking off of 620, so I was risking this level here, and we never really got any good pop to sell into, so it came down, and this is my mistake on my exit here. I wasn't really scared on here because I thought it could bounce off of some of this support and kind of ride up, but this is where my mistake was. My risk was 620, like I said, and this right here is just hitting the bid, and then it gets supported again, and then it gets hit back down, and we're on the bid. And I saw it in here right before it cracks, and I see this bid getting taken out at 620, and I'm like, well, I need to stay true to my risk level at 620, so don't get out once it cracks it. And that's like the wrong mentality to have in terms of a stock doesn't have to do what you want, and it failed, and it's just downtrending right now, and you've seen the bid continuously get taken out. So, like I said, I waited, and got taken out, dropped straight down, and so I couldn't actually get out until the 613, which was kind of a bummer, because I didn't stay true to my risk, or at least around it. But good learning lesson there that I need to be getting out. If it's failing, and it's more than likely going to break my risk. So I think in hindsight, I should be waiting until the higher intraday high gets taken out. This is tricky because intraday breakouts versus intraday perks. The perk, you have a better exit opportunity, but you have a bigger chance of it not spiking because you don't know what it's going to do. It's only a perk, and if it fails, then you can get out for minimal losses. But the breakout opportunity, you have a better chance of it spiking because it's broken out, but you have a bigger risk because it's so far off the lows. And that's why this trade, in hindsight, wasn't that great, was because I didn't take opportunity of either one. I got in on this, the mid-level intraday breakout when I should have been waiting for this. So the perk would have been like something like buying it, like here or something with minimal risk here. The breakout would have been buying it here with better chance of upside, but more risk. But I was buying it. I didn't have any good benefits here. So that's MARA. Next comes to AMPE. I was trading this a couple times. So it had its phase 3 results, trial results that came out, gapped at the stock, and had its big morning run here, and it's this green day that it was on, and you can see how there's not much resistance, real resistance, until like the 3 level, and you can see this breakout at 220 right here. So that's where my entry was looking at. 220 I was looking at. So here it breaks it. Actually gets as high as 246, comes down to 220, 221, and that's where I want to get in. I actually put my entry at my buy at 229, but I never got filled, which was kind of a bummer. But then, and it spiked up pretty well. But then it came back down and bottomed here, 230, and I really don't know what's going through my mind, because even up here, I was like, dang it, I should have bought that. I have 10 cents of risk down to 220, and I can see that it has spiked already up here. Should have been buying, I didn't, I was scared of it, but then it spiked up here, came back down, and then it was kind of holding this high. And I got in on this green candle at 258, but I didn't really like it because I should have been buying more of the lows. But my process was this, my thought process. It's got good news, it's a breakout, it's got room to run, and it just actually spiked up to here, and it's holding its highs. So then I thought that it could get back up to that high. Sure enough, it did. I sold half to lock in up here in the 80s, and then I was selling the other half when it couldn't break out in this mid 70s. And that was a good trade for me because I actually got the top there. Super proud of that. My entry could have been a little bit better if I had more confidence there. And then what it was doing, it held that breakout throughout the whole day, that 220 breakout. So near the close, it had this big red candle down to 223. So it held 220. It's ramping up in the close, and here I bought the little breakout, 233, risking off 220 again, and thinking that with the news and room to run here, like I said, it has all this to run, which doesn't look, oh, actually is down here, so it still had all this to run, and even top out at the highs here. I could have been happy with that. Didn't do much after hours. Pre-market was disappointing. This AMPE this day was the biggest gainer. It had massive volume. It was up, I don't know how much, but it was up a decent amount, the most on my scanner. And today, I mean, no real volume, like I said, so I wasn't scared to sell in here, but as soon as market open came and it didn't spike, I was looking to get out. So this one, I took my advice from the last trade on MARA, and before it took out my risk at 220, I saw it going down. I didn't see any big bidders, so I got out at 223. All in all, good trade in terms of thinking. But I don't know if I'm going to be trading overnight anymore, unless there's a good number 5 bounce to sell into a full morning spike / gap up. So I'll be staying away from those more than likely. Last trade was on a Friday, the 15th. I was trading XNet. So again, this is the culmination of many ideas. So if you know, XNet and Riot, RIOT, have been kind of moving in sympathy. If one spikes, the other one spikes. If one has a day of consolidation, the other one does. So we can see from, it has, well, I'd rather just show you here. So this thing can run. That's the biggest thing. The last 2 days it's topped at 18, roughly $18. And being a Friday, I think this has legs. So let me introduce Riot real quick too. So Riot was doing the same thing here, just like XNet, then actually spiked out, and now it's kind of the same bounce type of play, type of move, I mean. So what Riot did before XNet, which got me interested, was it was up pre-market, panicked, and had this little cup and handle, tanked, spiked, little panic, and then it broke out here, and then right here, it confirms this breakout over the day highs, and then spikes back up, and that's where I was thinking about getting my entry in, but this was, well, I missed it. I mean, it had $1 of upside, which isn't too much percentage-wise, but that's some good profits. I missed that one, so I was looking then to XNet, because they move at sympathy, and I'll just show you here. So the exact same thing happened here. It had its panic, it's had its spike back up, then this little pullback, then confirmed spike, or confirmed bounce off the highs. You can see the highs are here. So I was getting in at 1732, a little bit up here, so on this green candle, and thinking that I could just run on this Friday. And why did I think it could run? Well, if we go back to Riot, what it did on this day where it went freaking insane on the 12th was that same thing. It had its pullback here, its spike, like a little different pattern a little later in the day, but it had its pullback down to roughly the morning high and shot up. It got from roughly 27.30 to 31.80, and then even went higher, so massive gains. And on Riot, so I was thinking the sympathy-ish play was XNet, moving about similarly, and it's a Friday, so I just thought it could run. It didn't, so I was getting out. Where was I getting out? I think I was getting out up here in the 80s. I sold half in the, sorry, not the 50s. Yeah, I sold half in the 50s here. I get my interest here, sold half here. And I think I sold the other half. Yeah, it must have been when it took out my support. Yeah, it's right down here. In the 20 to 24s. I guess it's here, yeah. Because I was risking out, I think, one of these lows. Yeah, I was risking out this low. But I'm like, if I can't do anything I'm wanting, then I gotta get out. Turned out to be the best play, because I guess it did spike up later, but it had a down day. So, that was my week. Sorry that this was kind of a longer video lesson, or video recap. But I think the biggest lesson for me this week was that I've done great setting up my plays, but I just have to know that sometimes, and you gotta know too, sometimes plays just don't work out. They might have all the indicators in their direction and saying that the news, the market, the history is going to go up, it's going to go down, but you know, you gotta cut losses when it doesn't, because the stock doesn't have to do anything. And that was my biggest lesson this week. But I think I was pretty true to cutting losses. So don't get frustrated. These things happen, and enjoy your weekend. Keep to studying, and good luck in the coming week.